Titans, Bitcoin has been trending sideways all week now, but when can we possibly expect to see the next big move happen? And what do you need to know before we head into the weekend? Kevork, hit that intro. Let's kick it off with the Crypto Fear and Greed Index. Just a quick note that although the name of this index would suggest that it's generally all crypto, the gauge primarily fluctuates based on the movement of Bitcoin. Today we are at 79, which represents extreme greed after yesterday's recovery. But with today's pullback, this number will likely go back down by tomorrow to a number reflecting only greed. And in case you haven't already noticed, we've been seeing this back and forth pattern between the upper end of greed and the lower end of extreme greed all week now as Bitcoin continues to consolidate. Now let's move on to your daily reminder that the Bitcoin halving is in just 14 days. Also, note that the halving date is now currently estimated to be April 20th, but again, it's a moving date based on whenever the 210,000 blocks have been added to the Bitcoin blockchain. And for those of you who are new to crypto, this event marks the time in which the Bitcoin reward for the miners will get cut in half from about 6 Bitcoins to about 3 Bitcoins every time a block is successfully added to the Bitcoin blockchain. Moving on to the Bitcoin liquidation heat map. Just a quick reminder that this map tracks the short and long position liquidity for Bitcoin in areas that are either light or dark yellow. The yellow areas will either be above or below the current price action, which are the short and long positions respectively. So really zooming in today, we're not seeing much liquidity building up below the current price action with the pullback we're experiencing. But we are once again seeing some concentrated liquidity above the current price action in the mid 67K to 68K regions. With that in mind, we may potentially see a quick liquidity grab in those areas at some point today, since Bitcoin tends to follow the liquidity. Now let's take a quick look at the Bitcoin ETF flow table. Just a quick reminder to anyone new to this table, we're tracking how much Bitcoin the institutions such as BlackRock, Fidelity, ARK Invest, etc. are buying to back their ETFs based on the millions of dollars they are spending per day against how much Bitcoin is being sold by Grayscale in millions of dollars as folks are switching out of Grayscale Bitcoin and into the ETFs. Yesterday, April 4th, we had a positive total flow of $213.4 million, which marks our third consecutive day now of positive flow totals. Guys, this is your reminder that we are only 48 days away from a decision to be made by the SEC for the first Ethereum spot ETF by May 23rd. Don't sleep on Ethereum because you know what happened to Bitcoin leading up to the approval of the spot ETFs back in January. All right, now let's hit the charts. For most of the week, we focused on the 12-hour time frame for Bitcoin, but let's zoom out a little more today to the daily time frame. And as you may recall, we've been discussing this consolidation pattern throughout the week where the price has been going up and down, but the range for the highs and the lows is getting tighter as we continue to follow through. Now, generally speaking, when you have a consolidation pattern such as this one in an uptrend, there tends to be a higher probability to have a continuation afterwards. But of course, we can have a breakout or breakdown at any point. But if our patience is to truly be tested, the latest I can see either occurring would be as late as April 21st, which aligns very well with the fluctuating dates for the halving event. And historically speaking, the halving event has always been a trigger for the true parabolic effect on the price. Looking at the daily time frame again, we can also see that the Bollinger Bands are nearly as tight where we're at now compared to where they were at in the early part of February, but they are even tighter than where we were at in late February. And looking at the Bollinger Band width indicator down here, you can see the widths from a different perspective. I drew the squeeze zone here to show where the Bollinger Band squeezed the tightest at these yellow arrows right before a big move happened afterwards. And with this zone in place, you can see that we are primed for a squeeze at any time now. Also note that we saw the price go up after these last two squeezes. So again, I wouldn't be surprised if this next squeeze also leads to a breakout to higher prices because again, we are in an uptrend right now as we discussed on the previous chart. And finally, looking on the weekly time frame, I just want to point out that we are still finding support in this 65.5K to 69K support zone, which is very important as we head into the weekly candle close on Sunday. But again, the key here is to see us getting back above 69K before the weekly candle close because that's the previous all-time high from the last cycle. Otherwise, we'll likely continue going sideways until possibly late April before we get the breakout that we are anticipating, or maybe even the breakdown, which has a lesser probability. Titans, we are your one-stop source for guiding you through this Bitcoin bull run. Please join us as we continue to provide the latest market and technical analysis that are going to give you that edge.